In this video, we're going to talk about how we can use price action rules to help us predict directional bias of the market and where are the high probability setups. We're looking at S&P 500 and mini futures. The time frame is 2000 tick chart, and today's session opened with very strong bullish uptrend. You can't even break below the EMA, the supportive indicator, to 1 bar EMA. You have a spike up and a channel pattern. This is the bullish spike and a channel pattern. So the bias is super clear. I know that I'm going to make the most money today if I'm only thinking about long opportunities. So I'm just only thinking about opportunities to go long. I need to expect prices to keep going higher because this is the main bias. I'm not even thinking about selling. We're breaking below EMA and I have to respect the short-term correction, so I cannot go long as long as we're below EMA. The market is correcting. We're back above EMA and now we have felt second entry short, new low. First attempt to sell, push above EMA, which is a good sign that the market is bullish. Second entry short failure. So this right here is a second entry short failure while our uptrend needs to get new high. This is why we're drawing these channels, because we can predict what's going to happen. So this uptrend is new high. However, the signal bar is completely neutral doji. I didn't take it, especially this early after open. I want to see stronger bar. If you have some stronger bullish bar, this is a great setup, but because it is a neutral signal bar like this, I have to mark it more aggressive. We just needed to have slightly better bar to make it fully high probability setup. Easy one. There is no halo confirmation, and uptrend played out with the break-in new extreme. So this is how we predict what's going to happen. So now because I have a break-in new high when I'm watching this live, I pause looking to go long. Is the market correcting? No, it's not. Is the market reversing? It isn't. And we keep working hard. So given how strong today's bias is, it looks like there is some different channel. Okay, the trend may be much bigger. This was just the early stage of the trend. So I'm already playing with the idea that the trend may be wider. It's going to be secondary channel. Let's see what's going to happen. We're breaking below EMA. I have a new high, first entry long, pullback, second entry long. There's going to be a break above this bar. Can I go long? I cannot, because our main channel just played out. If I'm predicting secondary channel, I need more confirmation. We broke below the EMA. This is not good. Why the EMA is not holding? And lastly, there's a short-term downtrend working lower, so I cannot take it. Market keeps pushing lower. I have a small break, push to a new extreme. I have a new low for a century short. I have a high low confirmation setup, but it's not confirming much. It's below EMA, and even had it form above EMA, I would prefer a failed second entry short, something like this, to truly trust, okay, the secondary channel is valid and a brand new push phase is about to start. There was no failed second entry short and we have a brand new high created. So now I'm going to zoom out and I can see, okay, the market is still too bullish. There has to be bigger channel, because right after breaking new high, we keep working hard, so I can draw some secondary channel, something like this. There are a lot of ways how to draw it. I recommend combining your analysis with a high time frame, 10,000 tick chart. It can really help you to see the market geometry better. You don't have to be perfect, you just have to be close. This is a clearly strong bullish uptrend day. Every single time we break above EMA, a brand new push phase starts. So I'm only thinking about buying, I'm not thinking about selling at all. And I want to respect the correction phase and go long when the correction phase will end and a new push phase will start. And how can you recognize this? You can see repeat patterns here. Downtrend break, almost new low, downtrend break, new extreme. And the push above EMA is a sign that the correction phase ended and the push phase is going to start. So I'm thinking about the same thing. I want to see either sub at the EMA, or if we break below EMA, something above the EMA. So I have no setup here, no triggers, no nothing. So I'm just waiting patiently. Okay, I can draw. Initially I drew channel tight like this, but I can draw it even wider because I'm working with the market. Break, new extreme. So all downtrends played out. Okay, I have a new low, first entry short, kind of pull back. I can treat this basically as a high low. And this high low is now quite a strong bar, bouncing off our trend line, but it's a little bit stacked. It's not the best. I would like failed second entry short more, but now we have more information here than here. Now we know, okay, there has to be secondary channel because we have brand new push phase. So this high low is decent. Can get a failed second entry short, no failed second entry short, and another push phase up. Okay, the market is bullish. Correction phase, push phase, correction phase, push phase. So I'm still only thinking about buying. Trend is your friend. Follow the trend. Going to draw the downtrend like this. I have a new high, first entry long, second entry long. I can reset the count, first entry long, second entry long again, or I can keep things simple and I can view it as a one leg down, second leg down visual, second entry long, bouncing off the trend line again. We're closing above the EMA. This right here is a second entry long. This is a great high probability setup because we're combining the key entry points, downtrend played out, correction phase ended. You can see the channel has a lot of confirmations, everything in price action aligned. You're at the key entry point, downtrend played out. It is a solid enough single bar. You want to go long, great high probability setup, second entry long. Micro double top count reset, we're correcting. I'm going to redraw the downtrend. I cannot go long as this downtrend is in play. I'm thinking about some high low second entry long. Can I get it? No, we broke below EMA again, so I'm not thinking about buying. I need to see high low above EMA. Can I get it? I cannot. Market is correcting. We're correcting. We have a high low again, and now we expect new high to be tested. Once again, market moves in pairs of twos, one leg down, second leg down. I expect new high to be tested for this uptrend. But this high low is horrible double bar entry. The first bar is below EMA. And double bar entries are solid if they form good and context is clear. But we're still below EMA. I don't think we can take it. I really need a failed second entry short above EMA to truly know that the push phase is about to start and I'm going to get the new high. Can I get a failed second entry short? I cannot, and market played out with the break, push to new high. So I'm going to zoom out. You can see this is how we follow the price action. You don't really need the channels, but they help you to navigate the market better. They visually help you. You understand where the key entry point is. You can expect where the push phase is going to start. And now you have a break in new high. So now I'm going to pause looking to go long. Once again, this was quite a strong trend. So it's tempting to be drawing a lot of different channels, something like this. Be looking for some different alternatives, but nothing really feels that great. And if I'm going to take a look at higher time frame, you know, they're actually on 10,000 tick chart. It looks like there is some bigger channel. You can see this is also quite decent. I can draw just a little bit wider here, get still confirmation here, and I can draw like this. So this is also something I keep taking into consideration, but for the most part, I'm going to be patient and I can see what's going to happen. We have a first entry long, second entry long. Of course, I cannot take out the break in new high. It's a horrible bar anyway. Bearish bar. Downtrend played out. Okay, so now that I can see market broke lower, I'm going to mainly follow now the break in new high. Although the day bias is so bullish that I definitely expect market to eventually resume working higher. When you're trading up the entire day, you basically expect continuation at some point. We have a second entry short here, but I don't think we can take it simply because our first downtrend played out with a break new extreme. Okay, it worked in hindsight, and yes, you can draw wider channel, but this is quite risky to resort to drawing wider channel like this while we've been working hard the entire day, especially since the uptrend can be just slightly wider. I still don't think we can take it because you have break, new extreme. You know, I have to be careful. You know, waiting area now, just waiting here. I can draw the wider downtrend, and the downtrend fits quite well, so I can trust this wider channel. The correction is longer, no problem. We've been working hard the entire day. Okay, I also drew a trend range, something like this, trying to predict possible structure. Okay, market is correcting. Can draw the uptrend here. This downtrend needs to get new extreme. You know, you have a new high, first entry long, second entry long failure, breakout pullback, but it's still above the EMA. I don't think we can take it. It's still above the EMA. Can I get a lower high below the EMA? Almost. Before I reloaded my data, I had a really nice bearish bar here. So if you have a very nice bearish bar that I had before I reloaded my data, it was a great lower high because now it's ultimate confirmation on the first second entry long that the downtrend needs to get new extreme. But on this chart, I cannot simply go short below this bullish bar. And the downtrend played out. And this is a broad break push to new extreme. So the broader this is, the more I'm considering this downtrend over rather than drawing any wider channel because how broad and push to new extreme this is. And also we've been working hard the entire day. So I'm more leaning towards uptrend resumption. Once again, if you're going to take a look at 10,000 tick chart, you can definitely see how bullish it was. I think this was the first time you're around the EMA on 10K chart, but I need to see the push above EMA to resume that the buyers are back in the market, and this is what I want to see. Okay, we have nice strong bullish reversals. I would like to see second entry long at the EMA. Can I get it? No, not at the EMA. I'm gonna widen this channel a little bit because the bias is so bullish and I can still keep the structure intact. I'm still looking for second entry long, new high first entry long. No second entry long market, keeps going higher, keeps going higher. Now I like drawing slightly wider channel because There can be wider uptrend that needs to get new high. This is too bullish. We've been working higher the entire day. Notice how bullish this was. So I definitely expect market to go higher, but this is not good channel to trust because this push is too broad. I don't have as many confirmations. You know, this was tempting high low, but problem is we're not full at the EMA. We're not full at the EMA. You can view it sort of as a mini failed breakout like this, but we're quite close to these highs. I was hoping for something like this. I was hoping for some pullback here, testing the channel and then going higher, because to my liking this is a little bit sideways. Had this channel been more confirmed, this broad break messed this channel up a little bit, because I can also cut the channel, but you know, it's too subjective. This broad break unfortunately messed this channel up because you just want this channel confirmed, but the bounce is all the way here. Either way, this is a decent entry. I just wish this channel was more confirmed when you're watching this live. Okay, market keeps working higher. First entry long, second entry long. Now we actually have double trap because we're closing above EMA. It visually looks like a 2 legs down, 1 leg down, break, second leg down. So this is great high probability setup, double trap, confirming the secondary channel. And now the market is about to close. This is the overall structure for today. I'm going to zoom out. We have a very strong uptrend. It was all up, so you're not even thinking about short opportunities. And you can see when the break is so tiny, you can easily find slightly wider alternative. This helps you to lean more bullish and expect eventually bullish continuation. So this is why I was so inclined to draw wider channel here, especially since the downtrend played out with such a broad break and push to a new extreme. So this is it for today when it comes to the ES. I was watching also a couple other instruments and they offered a few good setups. So when the market gets slow, you can actually switch between different instruments and take a look if there's a high probability setup on one of those. Either way, I'm going to wrap it up. I hope you had a good trading day. I'm going to talk to you next time. Good luck at your trading.